Look, let me tell you something straight before you scroll, before you doubt, before you assume this is just another silver hype video you've seen 100 times already. This isn't about prediction, this isn't about fantasy numbers, and this definitely isn't about getting rich overnight. This is about a turning point that most people will only understand after it's gone, because that's how money works in America. The shift always happens quietly, slowly, while people are distracted by Netflix, DoorDash, and the illusion that their paycheck is enough. And silver, yes, silver, the metal most people laugh at, ignore, or treat like a boring uncle compared to Bitcoin and stocks, may be standing at a line in the sand right now, a psychological line, a financial line, a historical line, and that number is $80. Not because 80 sounds cool, not because YouTube thumbnails love big round numbers, but because 80 changes behavior, perception, and power. And if you don't understand why, you're not late yet, but you're dangerously close. Because think about your own life for a second. Your rent probably jumped again this year. Groceries don't feel inflated anymore. They feel normal at higher prices. Your credit card balance that you swore you'd pay off last year somehow didn't move, maybe even grew. Student loans restarted and suddenly that extra money disappeared. Retirement feels abstract, distant, like something future you will magically handle. And yet here you are trusting a system that quietly loses purchasing power every single year. Now imagine this, really picture it. Silver sitting at $20-something, $30-something, ignored, boring, flat, until one day it doesn't feel boring anymore. Because when silver approaches 80, it's no longer a metal. It becomes a signal. It becomes a headline. It becomes a dinner table conversation. It becomes a problem for institutions and a wake-up call for individuals. And here's the harsh truth most people won't tell you. Markets don't move when everyone agrees. They move when pressure builds under the surface and then snaps. And silver is one of the most pressure-loaded assets in the entire financial system right now because it sits at the intersection of money, industry, energy, and trust. And most Americans have zero exposure to it, zero understanding of it, and zero plan for what happens if it runs, which is exactly why it matters. Because think about how America reacts to prices. When gas hits $4, people complain. When it hits $5, they panic. When it hits $6, behavior changes, routes change, jobs change, votes change. Now apply that psychology to silver. When silver is 25, nobody cares. At 40, some people notice. At 60, the smart money pays attention. At 80, everyone is forced to ask why. And why is dangerous for a system built on confidence. Because silver is not just an investment, it's a mirror. It reflects inflation, debt, currency dilution, industrial demand, and trust in institutions all at once. And that's where this gets uncomfortable. Because America right now runs on debt like oxygen. Household debt over $17 trillion, government debt blowing past $34 trillion, deficits normalized, money created digitally, quietly with keystrokes, and people are told it's fine as long as markets go up. But silver doesn't lie politely. Silver doesn't care about narratives. Silver responds to pressure, and the pressure is real. Solar panels, electric vehicles, data centers, defense tech, medical devices, all need silver. Not some metal, silver, and unlike software, unlike stocks, you can't just print more of it. You have to out of the ground, slowly, expensively, often as a byproduct of other mining, which means supply doesn't respond fast when demand spikes, and that's the first crack most people miss. Because while Americans argue about interest rates and elections, industrial demand quietly eats into silver supply year after year. While investment demand waits on the sidelines like dry gasoline near a spark, and $80 is not magic, it's ignition. Because above that level, miners reprice, institutions reallocate, hedgers panic, and retail finally shows up late, emotional and desperate. And I want you to feel this, not intellectually, emotionally, what it's like to be early versus late. Early feels boring, lonely, almost stupid. Late feels urgent, stressful, expensive, and humiliating. And most people choose late without realizing they chose it. Because nobody teaches Americans to think in cycles, only in paychecks, quarterly earnings, and next month bills. So let me slow this down and walk you through a visual. Imagine two people in 2026, same age, same income, same city, same rent, same stress. One person hears about silver at 28, 30, 35, shrugs and says maybe later. The other person doesn't go all in, doesn't gamble, just reallocates slowly, intentionally, understanding that metals are insurance, not lottery tickets. Years pass, inflation grinds, markets wobble, silver moves quietly, then suddenly headlines appear. Shortages, supply constraints, industrial demand surging, price breaks 50, then 60, then 70, and now imagine silver at $80. That first person feels regret, confusion, anger. Why didn't anyone tell me? While the second person feels calm, not euphoric calm because they didn't chase, they positioned, and that difference, calm versus panic, is the real wealth gap nobody talks about. And this is where guilt should hit a little, not toxic guilt, productive guilt, because if you're watching this, you're already ahead of most people, but awareness without action is just self-betrayal, and silver punishes hesitation more than ignorance, because ignorance doesn't know, hesitation knows, and still delays. And here's another uncomfortable reality. $80 silver would expose how fragile fiat confidence really is, because precious metals don't spike in healthy systems. They spike when trust erodes, when hedging becomes necessary, when institutions quietly prepare for turbulence while telling the public everything is manageable. And you don't need a collapse for silver to run, you just need persistent stress. Sticky inflation, geopolitical tension, supply chain friction, energy transitions, all things already present, already normalized, already shrugged off, and that normalization is exactly what creates blind spots. Because Americans adapt fast, too fast sometimes. We adapt to higher prices, higher debt, lower purchasing power, until adaptation turns into acceptance, and acceptance turns into vulnerability. And silver at 80 would be a loud reminder that adaptation has limits, that money isn't neutral, that savings accounts losing value is a silent tax, and that doing nothing is still a decision. And I want you to notice something about your own reaction right now. Are you curious, skeptical, defensive, excited, dismissive? Because whatever you're feeling is a clue to how you handle financial turning points in your life. Do you lean in or tune out? Do you investigate or wait for confirmation? Do you move early or demand certainty? And here's the brutal truth. Certainty always arrives after opportunity leaves, because markets reward foresight, not comfort. And silver doesn't need permission to move, it only needs imbalance. And imbalance is already here. But the real question isn't, will silver hit 80? The real question is, who are you when it does? Are you the person scrambling for explanations, or the person who saw the setup forming years earlier? Because 80 isn't the end game. It's the line where behavior changes, and behavior is everything in markets. And in the next part, I'm going to break down exactly what changes when silver approaches that level. Who benefits? Who gets crushed? How institutions think about it versus retail, and the biggest mistake people make right before major moves. But here's the cliffhanger you need to sit with until then. If silver does push toward 80, it won't be because something amazing happened, it'll be because something fragile finally cracked, and most people won't realize what that crack means until it's already too late. Now listen carefully, because this is where most people lose the plot. Not because the information is hidden, but because the implications are uncomfortable. And discomfort is the one thing Americans are trained to avoid at all costs, especially financially. So if silver does move toward $80, the first thing that changes is not the price, it's the behavior around the price. And behavior always moves before headlines, before analysts update their targets, before your coworkers start talking about it in the break room, because institutions don't react the way retail does. They don't chase green candles. They reposition quietly. They hedge exposure. They rebalance risk. And when silver crosses certain psychological zones, 50, 60, 70, that's when internal models start flashing yellow, not red yet, but yellow meaning pay attention, meaning this is no longer noise. And while the average American is still debating whether now is too late, large players are asking a different question. What breaks if this continues? Because silver at 80 puts pressure on supply chains, on manufacturers, on contracts written years ago assuming lower input costs, and pressure always finds the weakest link first. And here's where the transformation arc hits you personally, because this is no longer about silver as an asset, it's about silver as a stress test on your financial psychology. Because when prices move fast, your brain does one of two things. It either defaults to fear or discipline, And fear makes you reactive. Discipline makes you strategic. And most people think discipline means doing nothing. But that's lazy thinking. Discipline means having rules before emotions show up. And this is where guilt should sharpen into responsibility. Because nobody forced you to ignore hard assets, nobody stopped you from learning, nobody banned you from reallocating even 5% of your net worth as protection, but the American system subtly encourages maximum exposure to paper promises. Stocks, bonds, retirement accounts denominated in dollars, while discouraging anything that reminds you money is a tool, not a guarantee, and silver reminds people of that in a very inconvenient way, because when silver runs, it's not celebrating wealth, it's exposing imbalance, and exposure makes people defensive. You'll hear phrases like, it's manipulated, it'll crash, it's just a spike, and sometimes those things are true in the short term, but notice how those phrases often come from people who feel left out, not people who prepared. And here's a real-life U.S. scenario you need to visualize clearly. Imagine a middle-class household in 2026. Dual income, decent jobs, mortgage locked in years ago, but credit card balance is creeping, insurance premiums rising, property taxes increasing, groceries still elevated, and retirement accounts heavily exposed to market volatility. Now imagine silver pushing toward 80. Headlines start appearing. Financial media brings out commentators. Some dismiss it. Some warn about inflation. Some quietly suggest diversification, and that household faces a moment of truth. Not because silver changed, but because it forced a reassessment of what safe actually means, and most households don't reassess until stress forces them to, which is why preparation feels boring until it becomes life-saving. And this is where pride needs to be reframed, because pride is not about being right, it's about being prepared. It's about saying, I don't know the future, but I respect risk. And people who respect risk don't bet everything on one outcome. They build resilience, and silver is not a hero asset. It's a stabilizer, it's a counterweight, but when counterweights start moving aggressively, that tells you the system is leaning too far in one direction, and here's the part nobody likes hearing. If silver approaches or breaks 80, the easy gains are already behind you. Not because it can't go higher, but because the risk profile changes, volatility increases, emotions spike, and latecomers make emotional decisions. Buying tops, selling bottoms, repeating the same pattern they always repeat with tech stocks, crypto, and meme trades. And this is why timing is less important than positioning, because positioning is calm. Timing is stressful. Positioning asks, what role does this play in my financial life? Timing asks, how fast can I make money? And those two questions lead to very different outcomes. And I want you to check yourself right now. Honestly, are you thinking how much could I make, or what does this protect me from? Because one mindset builds wealth, the other chases it, and chasing is expensive, mentally and financially, and this is where the mentor guide truth lands hard. Most Americans don't lose money because they're stupid. They lose money because they're reactive, they wait for confirmation, for social proof, for permission, and markets punish permission. Seeking behavior because by the time you feel safe, the risk is already shifted onto you, and silver at 80 would be a masterclass in that dynamic, because the people who benefit most are not the ones screaming about it on social media, they're the ones who quietly positioned when nobody cared, when it felt boring, when it felt unnecessary, and those people aren't geniuses. They're disciplined. They accepted small discomfort early to avoid massive discomfort later, and that's the step-by-step transformation most viewers miss. Step 1 is awareness, which you already have. Step 2 is education, understanding what silver is and isn't. Step 3 is allocation, not all in, not zero, intentional. Step 4 is patience, letting cycles play out, and Step 5 is emotional control when prices move, because that's when mistakes are made. And notice how none of those steps involve predicting exact numbers, because prediction is ego-driven. Preparation is humility-driven, and humility compounds better than ego ever will. And if you're wondering, so what should I do right now? The answer is not a recommendation, it's a question. What percentage of your financial life is exposed to things you don't control, and what percentage is positioned as insurance? Because silver doesn't need to outperform everything to matter, it just needs to show up when other things fail. and $80 would mean it showed up loudly, uncomfortably, forcing conversations people avoided for years. And here's the final pattern interrupt you need to sit with. If silver never hits 80, but you learn to respect risk, diversify intentionally, and think in systems instead of headlines, you still win. But if silver does hit 80 and you did nothing because you were waiting for certainty, that regret will be heavier than any missed trade, because it won't be about money, it'll be about self-trust. And the real alpha is not calling tops or bottoms, it's seeing turning points forming before the crowd feels them. And silver may or may not hit that exact number, but the conditions that make 80 possible are already here, and those conditions are the real signal. And whether you act on that signal calmly now or emotionally later is the decision that quietly defines the next chapter of your financial life.